Okay, welcome back to some personal finance here. We're going to go over taxes and income. Just give you a quick overview of it. We only about 15 minutes on each of these videos, so it might take two. And you'll probably have to do more research into your taxable income and especially if you own a small business or that kind of thing. We don't have enough time to go over that, but I do want you to kind of just get an overview of what's going on in your personal income and how to fix that. First of all, we come up to our tax brackets because we are in what's called a progressive tax system. And what that means is you literally, the more you earn, if you see here on the left side, the more you earn, the more percentage the government's going to take out of your check until you get to about a specific point. Of course, here is at $510,301. Then you're always going to be taxed at 37%. Right now, they're actually proposing a 70% tax on people who make $10 million more and more. So there is that. You might see an actual new bracket here. Now, a lot of people have some issues with the bracket and they don't understand how it works. For example, let's start here at the 10%. If you make anywhere between $0 and $9,700 as a single person filing, or if you're married filing jointly, 0 to 19,400. What people tend to think is that if I get that raise from 9,700 to 9,701, all of my income now is going to be increased by 2%. But that's not how that works. As the brackets work, is all the income above the $9,700 will then be taxed at the 12%. So if you made one more dollar than the 9,700, so that 9,701, that $1 is going to be taxed at 12%, while the 9,700 will be taxed at 10%. That's how that works. It's not, your entire income won't be taxed at the 12%. That's how the bracket works. Now, and as a progressive tax system, it is. Some people say it's unfair. Other people say it's fair because people who work in a higher income bracket use more resources and therefore must be taxed on a greater scale. But I kind of tend to believe that a percentage always increases. You get 10% of as your income increases, the amount that the government gets also increases. So again, the U.S. employs a progressive tax system, which means the more you make, the higher the percentages of your income they're going to take. All right, the more you pay. Pretty simple. Now here's a couple of ways to minimize your tax burden. First and foremost, you want to max out your tax-deferred savings. So any 401k, 403b plans, 401k plans your employer usually offers, and they match sometimes a percentage of what you put into that plan. And all those dollars that go into that savings account are are tax-free. So they're pre-taxed, right? So you're going to get that money in there, which will lower the amount of income that you actually have, and so therefore the percentage only comes out of the smaller portion of your income. So that's a really good way to do that. Plus, in 401k plans and 403b plans for teachers, 403bs are for teachers, companies, employees or employers will usually match it. So I've seen ones that word something like this: we will match 100% of your contribution up to 3%. Or they'll do 50% up to 6%, that kind of stuff, and which basically means they're going to match 3% of your income if you're giving 6% of it to your 401k. All right, that's free money, and usually it's not given to you right away. The vested amount, you'll see wording like vested amount, is where you have to wait a couple of years within the income, and in each portion of the money that they've supplied to you, more of it will become available the more you work at that company. Every year it changes. So you'll see stuff like that. So give me a call or text me or email me if you have any questions about your 401k plan at your current job if they offer it. They are sometimes going by the wayside as of late. SEPs are basically the retirement income for people who own their own businesses. It's the retirement program for small businesses and that kind of thing, sole proprietors, etc. IRAs are available for everybody. You can go to your bank and open up different IRAs. There's IRAs with mutual funds, etc., through different investors or financial managers or planners. So make sure that you're aware of those. Roth IRAs are basically almost the same as IRAs, but the way that they're taxed are a bit different. We'll talk about that a little bit later when we talk about investment and retirement. And Dave Ramsey believes that you should do a Roth IRA, and we'll talk about what that means later. But IRAs are simply just a place to retire, a place to put money, to park money, and there are caps on those. So what we're saying when we say to max out your tax-deferred savings is put the maximum amount you can in there. Now, if you have debts, you want to not do that right now. Okay, you gotta wait till you pay off your debts. Health savings accounts, they basically are a kind of like an insurance, like a health insurance, right? So you can put money in there that's tax-free, and what'll happen is you just figure out how much money you're going to spend on health care each year, and you're going to try to get to that point, because you have to, in most cases, spend that money in your health savings account before the year is over. And that covers everything from diapers to Tylenol, etc. So that might be worth it for you if that's something you can do. If you think you could be on top of that, that's also another way. Another one that I don't have here, flex spending accounts, which are similar to health savings accounts. You can look those up on your own. Next, of course, this is a real easy one. Increase your charitable giving. So go above and beyond your tithe there to your church, or if you keep all your receipts of the things that you give to Salvation Army, etc. You can even, if you can think of the stuff that you use to wear and tear on when you go out there and you invest your time, you can actually itemize those and deduct those from your taxes as well. Start a home office. Right now, with the new tax way that this works in 2019 with the new tax law, is that you can deduct up to $5 per square foot of the home office that you're claiming is a home office, up to 300 square feet. Okay. Before, you can itemize all the things in your office, etc. It was kind of a red flag for the IRS, and they'll come and knock on your door and say, hey, what's going on? But now they've really made it much easier, so it doesn't send those kind of red flags, and people aren't as scared to itemize these now, because it's $5 for every square foot that you claim is your home office if that's where you work. For example, I'm an online teacher, and I could claim that my office is here at my home and get a tax deduction for that. Of course, your mortgage interest, although this did get lowered this year, you can claim the interest paid on your mortgage in some ways. So you get percentage of that back, and of course your student loan interest as well. You're going to want to keep track of all of those things, and just there's a billion different things that can help you minimize your tax burden, but these are the big ones that I think you guys will really partake of. So make sure that you are looking at those. Ask your tax advisor or your accountant, your friends, or whichever. Make sure that you're getting the maximum amount here back, right? So another good one, I don't know if you have any investments, but if you're going to do any investments like stocks and those kind of things, you want to be subject to the capital gains tax. In order to be subject to the capital gains tax, you need to hold those investments for a year and a day, so anything over a year. If it's less than a year, it'll be a short-term capital gain. If you, for example, if you made some money this year and you want to cash in those stocks, and you just bought them in the beginning of January, all of a sudden they skyrocketed at the end of January, and you're like, this is the best time to sell. Well, you're going to be taxed as if that was income, as personal income. So that could be a higher tax bracket for you. So you want to make sure that you're aware of that on there. Now, how to lower the amount of refund. Now, here's where most college students that I teach are excited about getting their refund. But listen, here it is. It's your money, not the government's. Stop being excited about getting a refund. Get angry and fix it, because what you just did was you gave the government a loan, and they gave you 0% interest on that loan. They didn't give you anything back for it. And so you should not be happy about getting a refund. You should be using that money in every one of those paychecks you get to do something with your family, to invest it, to get out of debt, etc. Don't give it to the government. don't get excited about getting a refund. That means you did not have enough money withheld from your check every month. All right. So how do I increase the? How do I do that? How do I reduce my refund? Well, on my W-4 with my employer, I would go down here to, you'll see number 5 says total number of allowances you are claiming. Now you can use the worksheet below, but that's just for reference. You would just, all you do is plug in a couple of numbers. Oops. Plug in a couple of numbers in 5 to make sure that you are, let's say for example you made 12,000. I'm going to use 12,000. It's easy. Let's say for example last year you got a $12,000 refund. All right, that means you're going to need to take $1,000 out of every month or $500 out of every paycheck. You're going to need to make sure that that comes back to you every paycheck. So in order for that to happen, you need to start claiming a certain amount of allowances. Now, I don't know how much each allowance will actually net you. So the best way to do that is talk to your HR department and talk to your tax people, and then you do kind of a trial and error. So let's say 1 month I decide to claim 4 allowances or 5 allowances or 10 allowances, and it's knocking it's giving me close to my $500 mark, right? Okay, so I've claimed 3 allowances for this next paycheck, and they gave me $400 extra on my paycheck. Well, that's not my $500 mark, right? I need to make sure so then I need to claim maybe one more allowance so that I get to that $500 mark. And you want to get as close as possible as you can. You can claim as many allowances as you want, as long as that you're not owing the IRS. Do not owe the IRS, but make sure that the IRS isn't owing you, because they will not give you interest back. All right, so over here in line 5, when you talk to your employer, just kind of play around with this. You might have to do it more than once to find out what it is. You'll just ask for a new W-4 form and fill that out with your HR person or your hiring manager, whoever it is that might know, and make sure you do that correctly. All right, but do not owe the IRS. You'll have to look back last year, see what your refund is, and if nothing's changing this year, that's where you're going to start making those adjustments. Cool. Now, so you got some increase in your taxes. We'll spend about 3 minutes here, 2.5 minutes here on how to increase your income. We'll go really fast. First of all, sell stuff. Get into selling everything you do not need. All right, find anything you don't need or want or whichever, and get rid of it. Especially if you're trying to get out of debt. Right? Buy things and sell them on an eBay store. I knew a friend of mine in high school who used to make a lot of money just buying and selling stuff on his eBay store. And he made some pretty good money doing that. All right, and that's just an easy thing you can do on the side. Another one is get into the gig economy, man. It's been around since 2015, a little bit earlier than that, and people were driving for Uber. Do it. Drive for Uber, drive for Lyft, teach online, grade papers online, tutor for care.com, etc. Find ways to get involved in the gig economy and make some extra money. Get into some part-time work or a business. Open a part-time business, not I said but not a multi-level marketing scheme. Okay, don't get out of the MLMs. Work on doing other things that produce other stuff. Okay, like painting houses on the side. Pick up a part-time job. Do lawn care, paint nails, whatever it is. Cut hair. Just do something on the side there that you can earn some income to get yourself out of debt and into a prosperous life. The world's different now. It might take more than one job to prosper, and so you'll need to figure out how to do that the best way you can and still maintain a relationship with your family. All right, so focus on those things. Take a look at, if you need to go back here, take a look at what you could do to fix this. Now again, this is just a quick overview, about 15 minutes long. You'll need to do some more research on your own, and awesome. So I hope you are richly blessed. God bless you all, and have a great day.